final week of 2021. It's been a bizarre year. I think a lot of people have really not understood what's been going on. Definitely, we got the twist of the COVID crisis and then the lockdowns, but the entire recovery has been one that has been looked upon with skepticism. In fact, even now, more than a week back, I've had several calls asking me, have we finally reached the point where this bubble is going to burst? That's the question I'm getting from retail investors. These are individuals, not necessarily from the sector. Uh, it could involve even, my daughter's tuition teacher, for example. And if I'm getting those kind of questions, I think people are still not getting what's really been behind this entire move, which has a lot to do with the global macro trends in currency markets and the expansionary policies of central banks, which are around to stay. And the other thing to watch out for is what the interest rate policy in India is really going to be. So far, we've managed to keep interest rates down, suppress them. They're likely to remain down for a while longer. And in fact, we have what you should know as negative real interest rates, which means interest rates are actually trailing below inflation. And if the government really wants to continue on its spending plans, the budget is going to be in little more than a month, then they are really going to need to keep the interest rates at the lower end of the curve. And in fact, I would think that once they are able to get the inflation numbers start to move down a bit more, they'll probably start cutting rates once again. So that's a hidden trigger that markets always like. I wonder what impact that would have on the currency, because so far equity prices and currency markets are supposed to be inversely correlated, which means if the Nifty goes up, the USD INR goes down. But so far the USD INR has not fallen below the low that it made in September. And so it's actually made higher lows, higher lows. So that's a deviation, and it might have to do with what the RBI is doing on interest rates. Now, of course, with the falling dollar consistently, it's possible the USD dips a bit. I have a key support somewhere around 72.40 that I'm going to be watching for the medium to longer term trend. But I'll not rule out a point where, both the market, the equity market and USD INR actually go up together because of this deviation and because of our own monetary policy. So let's not rule that out. Let's see how that goes. And next week, I think after we've already seen the knee-jerk reaction last week, there's no reason to expect that to happen again. Except that, you have a year-end holiday period. So I wonder whether it'll be a dull trending market to the upside, or whether it's going to just simply continue at the same rapid pace. That's, I think, the only thing to think about from a 1 week perspective. But beyond that, the trend should probably still continue, because all the triggers and all the reasons, the entire setup is still the same.